All right, everybody. Again, thank you for joining. My name is Josh Haas, and I'll be leading the webinar today on signs you may be paying too much for your credit card processing. Of course, we're hosting this in conjunction with our partners, COVD, which we've been a proud partner of for the last 7 years, which has been fantastic. You see kind of some of the statistics in the quick about Wind River Financial and why we're the experts to host this webinar on credit card processing services. We're not only partners with COVD, but we do also process payments for more than 250 private practices across the country. We're really proud of that number. I would say that we are really, truly the experts in the optometry space for payments. Certainly, we don't know all that you do about serving your patients, but from the payments piece, we have you covered. A quick number of that we've eclipsed the $2 billion number in payments processed for an annual year. We crossed over that threshold in 2021, which makes us a top 100 processor across the country. But one of the great things about not only being large enough to service businesses large and small is that all of our customer service and security support is in-house, which we're very proud of, which we believe leads to our industry-leading customer service model we call after the handshake, and why we've been asked to partner with COVD and service their membership again for over the last 7 years. We're going to talk today about some different signs that you might be overpaying for your merchant services or credit card processing program. We really break it down to the 4 key areas that all programs have that need to be evaluated. We recommend, of course, on an annual basis. This can go on a biannual basis or whatever cadence that you select as practice owners and potentially people in the billing departments or accounts receivable departments that are on the call. But we break them down into pricing, service, security, and technology. As you can see there, those are the big 4. And we're going to hit on all the key areas and certainly some tips along the way to see if you are overpaying for any of those current key areas that we want you to evaluate. Understanding credit card fees. I'm just going to talk at a very, very high level about kind of how all the pieces fit together, as you see illustrated there. In the merchant services industry, there are what's called interchange rates, or card brand fees, maybe more commonly called. These are fees that are set by Visa, MasterCard, Discover, and American Express, the card issuers. There are more than 400 different interchange rates because there's more than 400 different cards that are out there on the marketplace today. And before you pull your hair out trying to understand all of them, I just want to give you that kind of detail just to kind of understand where your pricing starts. Again, these are set. No processor, i.e. Wind River, any of our competitors negotiates with Visa, MasterCard, Discover, and American Express for better card rates. Those are set based upon the card that's issued. The card brands do reserve the right to update those twice a year. So not only are there hundreds of them, they can change kind of on a twice a year cadence. We have actually seen with the pandemic, many of those rates didn't change, and in certain industries they actually did lower those rates, but typically, unfortunately, we see that those rates increase, and what that means is for business owners, you end up paying more to accept cards. That we estimate, depending on your program, that could account for about 70 to 90% of your total fees that you see come out of your bank account on a monthly basis. The remaining, 30 to 10% is what you're actually paying a merchant service provider, again, i.e. Wind River or any of our competitors, to actually move that money from your patient, from your customer's account to your bank account, as well as the service and security support that you receive. And we'll touch a little bit more on just the specifics of this, but as again, a 30,000 foot view, this is how the merchant service industry works. There's set fees that all processors will pay on behalf of their customers, and then the agreed upon fee schedule with your merchant service provider. I do want to make note, I probably should have at the beginning, but this isn't a live interactive chat. So if you have questions, you can type them in there. If you want to send me a chat, you can as well. I will see those as they pop in. So if you have questions along the way, feel free to send those to me as well. So kind of understanding your fees, you see kind of a snapshot there of what a merchant statement might look at like if you're taking a look at this. Most traditional merchant service providers like Wind River will provide a detailed statement at the end of each month that shows not only your transaction history, but also the corresponding fees. We recommend that even though it can be a little bit cumbersome, the more line items, the better, really, because the transparency is the key word there. If you don't have a merchant service provider that's transparent with the amount of transactions, the dollar amounts, the percentages you're paying, unfortunately, that's often used as a disguise to hide those rates, and that's when we usually see that fees start to creep up. But the easiest way to take a calculation to just kind of get a benchmark of, hey, is my program competitive? We call that the net effective rate. This is a simple calculation. You just take that total fee number that came out of your bank account, or if you're looking at the statement, what's listed on the statement, divided by your total sales, you're going to get a percentage. Now that could be a wide range. For some practices, potentially that's under 2%. For others, maybe it's at 3%. And just depending on the cards that are coming in, really monitors or kind of sets what that's going to be. Because again, a lot of what you're paying, that 70 to 90% are fixed costs, depending on the card that your patient wants to pay with. So we always recommend read the fine print on the statements. Try to check and see if you see kind of in that snapshot at the bottom of my PowerPoint slide, there's a percentage and then a per transaction fee listed by each card. Again, those for this specific one, DS is standing for Discover. Again, those are set by the card brands or the card issuer. But again, we want to know that. If you're ever interested in a statement review, which we'll kind of touch on at the end, Wind River provides those at no cost for COVD members. But we want to understand not only the fees that you're paying to your current provider, but also those card brand fees, as we've alluded to, because that's really the biggest markup or the biggest bulk of your overall fee at the end of each month. We also recommend, hey, make sure you're not signing into any contracts if possible, because at the end of the day, I think the common nomenclature is a contract's going to lock my pricing in. It makes me feel good knowing that my pricing won't go up. Unfortunately, in our space, and maybe if in others you've seen as well, that the easy one is the cable bill. Just because you signed into a 2-year term commitment doesn't mean you're locking in that pricing. Merchant service providers do usually reserve the right to increase those fees at any given time, and unfortunately, many times that's without notice. So again, we recommend not entering into a contract. Whenever our approach is at will agreements, just because that adds to the accountability back to you as the practice owner. Again, if pricing were to change, you're kind of stuck if you've signed into a term agreement, which is why Wind River doesn't choose to go in those, and we also don't choose to raise our pricing on any of our customers after they've signed up. But another thing to look for on your statement, there's been a ton of recent mergers in our space. So where there was probably hundreds of competitors, there's certainly fewer and fewer as the largest have gotten even larger. Many of the competitors that we see in our space are the Worldpays, the Global Payments, Pfizer, FIS, Chases of the world, where they have millions of customers and process hundreds of billions of dollars each year. But when those mergers happen, unfortunately, those acquisitions are paid for on the backs of small and medium-sized business owners. That we typically see that if a name change happened on your statement, so for instance, one company bought your current company, that usually corresponds with an increase in fees. So a name change is usually synonymous with a rate change, and unfortunately, for many practice owners, that's an increase. So another reason to take a look at it, if you've noticed a different name on your statement, feel free to reach out, or if you're interested in just a statement review like we talked about, we're happy to provide those, because unfortunately, again, name change equals a rate change, and those are usually going in to be increased as opposed to a decrease. One other thing that you can look at as a quick example on your statement is what we call bundled, tiered, or maybe potentially flat rate pricing. Typically in the sales process, this is more clearly defined, and it makes many feel more comfortable with the fees that you're going to pay, understanding that, hey, there's hundreds of interchange rates. How am I going to keep my finger on this to make sure I'm getting the best ones? Maybe this bundled rate would be more appetizing and just easier to understand at the end of the day. And while I understand that the ease of the sale is quite, I mean, that's appealing to most. I'm going to give an example here of a qualified, mid-qualified, non-qualified. Those are not industry specific. Those are defined by the merchant service provider. And here's kind of the issue with them. So we take a standard credit card, it's a Visa card that you see kind of listed on the side of the screen there. The interchange rate attached with that Visa card, again, set by Visa, is 1.65% in 10 cents. So we see there's one of 3 different price points that we could pay if we're in this bundled program. Well, which bucket is that going to fall into? Certainly the merchant service provider is not going to take a loss on that card, so it's not going to go in that qualified bucket. Does it then go into that mid-qualified bucket, or does it even get deposited in that non-qualified bucket? And unfortunately, for business owners, you don't control that. Your merchant service provider does. So typically we see at the beginning of the relationship, that might fall in the mid-qualified bucket. 2.5%, 10 cents, okay, we can stomach that as a business owner. That's not the end of the world. But then the longer the relationship, maybe that same card is now, for whatever reason, again, because it's just set by the merchant service provider, now it's a non-qualified card. Well, now that's seeing an increase in cost for me as the practice owner. And I don't like that, but I also don't have any transparency to understand why it's doing that. Again, it's set by the merchant service provider. So a recommendation from us is to avoid these bundled, tiered, or flat rate pricing structures, because at the end of the day, it usually means an overpayment in cost. Your fees are probably going to increase for the length of time that you work with that company. Kind of touching on the remaining three of the big four, obviously the statement analysis is the big one, understanding that, and Wind River is more than happy, again, to help you guys understand exactly where you're at, where you should be, if there could be improvements made, or maybe potentially you're in a good program and you just want a second piece of eyes on it from an expert. We're happy to provide that. But we also talk about the value of good service. And we've really broken it down, again, just a simple 3 tiers here, as you can see listed: urgent, reactive, and proactive. Again, most of the time, this can be a set it and forget it type industry. As long as the money is being deposited at a rate that we can stomach, the fees aren't too high. Many times practice owners are quick to say, my program's working, I'm okay with where it's at. But you can also see increases in cost if you don't have this proactive service model. So for instance, some of the things that would fall in that proactive bucket would be, do I have chargeback support? So if a customer disputes the transaction, what happens? Is that an automatic loss for my business, that I'm out the money that I was charged that customer? Or do I have a team that's going to help me recoup potentially those losses and damages? How about qualification rates? Again, we talk about how 70 to 90% of the total program is based on if I'm qualifying for the best rates with the card associations. Is that a part of my current program? If it's not, or I'm unsure, should it be? Our answer is yes, and at Wind River, that's a part of what our customers receive to make sure they're getting the best rates on each transaction. And then we talk about security and just overall industry updates. Do I have the right technology in place? Is my technology actually causing me to downgrade and get the wrong transaction rate, where I'm paying more because I don't have the right technology in place? All good questions to ask, all good things that we'd love to have a conversation with you to help understand. And again, point you in the right direction if this is the program that's right for you and your practice. Talking about the cost of security, I mean, I think this is probably the second, or maybe it's the third thing that comes to mind, but obviously we're in a digital age. Technology is everywhere and it's very important for all businesses these days. But in our specific space, most of the time that we talk about security and it's synonymous with PCI compliance. If that's not a term you've heard before, I'm just going to give a quick overview of what it is. But PCI stands for Payment Card Industry. It's the data security standards required, again, by the card associations to properly transmit and communicate the sensitive card information. So minimally, what that means for businesses and practices out there is they're completing a self-assessment questionnaire on an annual basis. If you're not completing that questionnaire, more than likely that you're probably receiving a non-compliance fee. And sometimes that's listed on a statement. Sometimes it's just a straight withdrawal from the bank account. But that's, again, something that we can help you with and understand. Am I doing the right things to safeguard this information? Am I compliant? Am I obeying the rules set by Visa, MasterCard, and the card associations to process card transactions? Because if you're not, unfortunately, not only are there fees possible, you're also at an exposed risk for a data breach. And I know that most of the time we think, hey, we're small, medium-sized businesses. That's not going to affect me. They're going after Target, Home Depot, Uber, all businesses that have experienced a data breach with their credit card program. But the reality is 95% of these data breaches happen to small and medium-sized businesses that don't make the national news. And you can see that number there. The average fine for a data breach is $40,000, which can be crippling to any size business, but certainly our smaller practices out there. That's why Wind River has a program in place to help protect our merchants. We want to make sure they're not only satisfying the compliance regulations, but also making sure that their overall systems are secure so that they don't have to lose sleep at night worrying about how am I going to make sure that I can take payments not only cost effectively, but securely so I'm not at risk of a data breach. And you see a couple of, at least one tool that we have there, something called point-to-point encryption. Again, maybe many of you haven't heard about that, but that's something that's really important in our industry, making sure that that data is encrypted at the time that it's entered, whether that be swiped, inserted, dipped, or hand keyed into some kind of virtual terminal or web portal. That's something Wind River can help you out with, and it's a big part of PCI compliance, which is why we deploy that for our customers. One of the other thing we've seen just recently, again, you saw this on a previous slide on a statement, is some of our competitors are now charging a non-EMV risk assessment. EMV, of course, is the new chip cards, not so new anymore. They've been around since about 2014, 2015. So many practices are taking the chip cards today, but some aren't. And some, even if they are, they might be swiping cards or hand keying cards, and they're seeing this added penalty for non-EMV risk assessment. Again, something to check for on your statement, or have Wind River help you out and see if that's something that you're seeing on your statement, because again, it's an added cost to the business and ultimately should be very much avoided in most programs. We'll talk about technology cost as well. I did mention that having the right technology can affect your overall processing rates. One of the big things we're seeing right now going on is that many of the major terminal manufacturers, Verifone and Ingenico, probably sell the most terminals worldwide. These are kind of listed on the side of the screen that you can see there. You might have one or multiple of these in your practice today, but they've basically put some of these on end of life. And what that means is they will continue to work, but they are not receiving any service or security updates. Essentially, it's you can think of it as an old laptop that you might have laying around. It might work. It might take a couple hours to connect to the internet. It's a similar thing that's happening with the standard tabletop terminals. They've basically come out with a new product that looks very similar, but again, has some updated security, point-to-point encryption. So if you're using potentially one of those devices, it's a good time to reach out, just have a conversation and say, hey, is this actually affecting my total rates? Is my program still secure if I'm using one of these? One of the other things that we're talking about too is the difference between a hand keyed transaction or a card not present transaction versus a card present, whether that's swiped or dipped transaction. And we recommend, if possible, if the card is physically present, you want to enter that into your terminal or into your virtual terminal, because at the end of the day, for practice owners out there, you get a better rate on that transaction. Again, we're talking about qualification rates that we touched on earlier, but that's a best practice. If you can, swipe that card, insert the EMV chip reader, and if it's not physically there, again, there's nothing wrong. It's not really gonna be a huge concern if you're hand keying that transaction into something that has point-to-point encryption, but you are going to pay more to do that. We also talk about incorrectly entering the data. This is really reserved for, are we taking payments over the phone or by mail or through our website? And if we're not capturing all of the correct data, that's also called a downgrade. And you can see there that can add as much as 0.5% onto the card brand fee. So again, technology affecting your total costs. Talk with us. Again, we recommend just having a conversation. How do you need to accept payment from your customers and your patients? And how can you do it best, most efficiently for your staff, securely, and cost effectively as well? And our last point to that is stay away from terminal leases. The lease is just really, it's synonymous with a negative connotation in our industry. You end up really paying too much for a piece of equipment that should probably only cost you a couple $100. Most of these leases are on monthly terms for terms of at least 3 to 4 years. And those leases we've seen anywhere from $40 to $100 a month. You know, if you're in a $100 monthly terminal lease, you've paid for a new device in 1 year, probably 3 times over. So by the end of that 4-year commitment, you're paying, gosh, $4,800 for a device that might cost you $400 or $500. So stay away from those if at all possible. Most of the time you can purchase that equipment up front. Just talk to your merchant service provider or Wind River about it, that best practice of avoiding the leases. So just to kind of recap everything we've kind of talked about today, we're really focusing on the big four in our industry. So for merchant services, think pricing, of course, service, security, and technology. The pricing piece is, these statements I acknowledge, it can be very confusing. It can be frustrating to try to read through them. We recommend an expert take a look at it. And if it's been 6 months, a year, multiple years since the last time you've looked at your program, we recommend doing that. And again, get an expert to do it. Talk with a merchant service provider, talk with us at Wind River. We'd love to provide that, again, free cost analysis for you to understand where you're at today and if there are improvements that could be made. Service, of course, we can't put that by the wayside. It does affect your overall costs. One of the things I didn't mention is most of the reactive service models are the 800 call centers. We've all spent hours on hold with people only to be transferred to another person who transfers you again before you can get an answer. And for practice owners out there, I mean, think of the time that you're paying your staff to just sit on hold. What other things could they be accomplishing at your office if they didn't have to sit on hold all day? So that phone call, although it might not have a hard cost, it certainly does affect the efficiency of your practice. Again, having a proactive service provider is really what you need to look for to make sure that all areas are functioning at their top efficiency. Security, obviously that's usually synonymous, like I mentioned, with the PCI, but confusion over what we're doing, what we're not doing, what security tools we have, it ultimately can lead to financial risk. And we talk about the most negative of that being the data breach, which we again saw that $40,000 is the potential damage for that, potentially more depending on businesses that have a higher card volume. So we want to avoid that at all costs. And if you don't have a service provider today that's talking to you about it, you really need to find one. And again, that's something that Wind River can help you out with as well if you have questions on it. And then of course, the technology piece, how are you actually entering this card information? Is it a card present transaction? Is it card not present? Is it through a website? Really, at the end of the day, the technology out there is pretty uniform across all of our competitors, and with Wind River, everybody has access to the same technology, but what's the best fit for your practice and how is it deployed? Do you have proper training on it? Are you hand keying transactions that should be being entered manually, or directly into a terminal? That would save your practice some money. We'll have that conversation with you and understand what's the best fit for your practice. So at this time, I'm going to open this up for questions. I apologize. I'm not 100% certain if you could take yourselves off mute, but if you can't, we also have a chat feature that you can use. You can send those my way, and I'm happy to address any questions that we have here while we have a couple extra minutes on the webinar. Okay, I'm not seeing or hearing anything, so I'm just going to kind of go to our last slide. Again, we're here to help. We want to help out COVD membership. Your business is important to us, and we want to make sure that you're in a good program. One of the things that we're offering is, again, that free statement evaluation for all COVD members. I also want to make note, if you enjoyed the information that was presented here today, we're also doing a quick series, 10-minute webinars on other features of your merchant service program. The first one being sneaky fees to look for on your statement. Again, we're happy to do that as an evaluation for you as well. But if you just want some more information on it, you can contact me here on my phone number or email to get a link to that upcoming webinar that we're putting on as well. I'm just going to pause and check to see if we have any questions or anything going on in the chat. But if nothing else, this has been recorded. This will be shared with you if you have other members within your practice that want to view the webinar. It'll be made available to you, and it will also be shared with COVD that they're going to put in a resource center for future review. If you have any questions or want to just get my contact information, please contact me directly or COVD. They'd be love to put you in touch with us to help see if we can provide some assistance. All right, everyone. Well, again, I thank you for your time today. We appreciate it. And hopefully we'll have a conversation here in the near future. Thanks again. Enjoy the rest of your day.